What's up, guys? How are you doing? This was the first trade that I took today, and you guys are probably going to scold me for this, saying, why you're going short into this resistance now acting as a support, and why are you going short into the EMA? You're teaching us complete opposite. Well, that's true, but I also teach you mainly that most breakouts of trading ranges fail. And let me explain. This is perfect scenario. You can see clearly there is some sort of resistance working. The prices are working higher and there's some sort of ceiling and they cannot break through the ceiling. They break through it right now. And now imagine all these people that went short here, went short here, went short here, went short here, and went short here. They sold, and where did they put their buy orders? Well, most people put their buy orders right above this resistance. Maybe 1 point, maybe a few points, just a little bit above this resistance. This is 99% of retail traders do this, and most institutions do this as well. They use this price action structure to put their stops above this resistance. Now, Now think about you're a big hedge fund manager and you're a long position in this market. Maybe you've been holding this long position for I don't know a few months and you want to liquidate your position, maybe just some part of it. You don't want to liquidate your position just right on the spot because you will sell and the market will go lower and lower and lower, thus making your average price lower and lower and lower. So you will lose. So you will be losing money periodically. So what these hedge fund managers do, they actually rally they will buy just a little bit market to rally it up just a little bit above this resistance. And now think about this. They are selling their position. So what other side orders they need? Since they are selling, yes, they need buy orders. And buy orders, they are those people who sold here, they have resting buy orders here to get them out of the trade. And also, the hedge fund manager, when he rallies up market just a little bit higher, he will get new longs that basically trade breakouts. They don't know what they're doing. These will also come into play. So he is looking just for the liquidity, just for somebody to take other side of his orders. So this is why I took this trade, because I was expecting that this is exactly what's going to happen. Look at the nice move down. Most breakouts of trading ranges fail. This is the reason. If you're holding big position and you want to sell it, you just want to somehow find who's going to take the other side of the orders. And these guys trapped everybody. Every buy stop order triggered here and he sold right here. And it led to this because more people saw it. So they actually, kept selling just like me. I saw it, so I kept selling. But this is the reason why the breakouts of the trading ranges fail. The big hedge fund manager or whatever, some big institution, this is what they do. They just use this price action pattern. They just use it to their advantage and they're capitalize on it. So this is the reason why I took this trade. This was a lower high. If you look at it like this, there's a clear support. You got a break of this trend line, a new high. Anyway, so I just wanted to start and clarify this so you get the idea why this thing happened. But we were working higher. The first trade, this was way too early for me, but you probably could have been trading this. This is a perfect second entry long, and I'm going to explain to you why. This is when you're looking at the price right here, this is the newest high of the move. Prices went from this high to this low and they were working. This is high, this is lower high, boom, another high, lower, boom, and this is a higher high. So I'm counting from this high. First leg down, market moves in twos. Remember, market moves in twos. First leg down, correction, second leg down. Of course, this trend line was working higher, so we didn't get the measured move. See, look at this bullish bar. This is not first entry because the prices didn't tick above this bar. So this is just still first bearish correction, and this is the first entry long. This is the first tick above the first bullish bar. Prices went up, it failed, pulled back, and the second entry, I mean, it didn't fail because it still worked. Your stop would have been okay because you keep your stop below this entry bar. And this is the second time the prices broke one tick above this bullish bar. So this is the first entry, pull back, second leg, two-legged pull back to the trend line, and second entry. This was a good long. This is when I came in and I didn't take this. I was so tempted. My hand was itching so much. If this bar broke broke below this bar, I would have taken this trade. But since it didn't break below, I had to let it go. I just cannot, break my rules. I had to let it go. This was his first entry. Too bad. So I took this trade. I've already explained it. It's a shame that we didn't get second entry right here. This is just the first entry. So it was also very tempting to go short here. Once again, my hand was very itching, but you cannot break the rules. We trade second entries and they work. They are high probability trades, so you cannot go short here. And then we're just kind of chopping lower. Who would have known that the market's gonna spike down like this? And then you make double bottom. So now you're in the trading range, and now you're thinking, okay, we got a break and a new low of this trend line. We bounce here. This now confirmed support. So basically, our thoughts going short are now over, and we should be thinking going long. Still, I don't see any good setups. This is too big of a bullish bar. This is terrible signal bar. Then you break and then move higher. And notice how you have to be patient. You have to be patient as a trader to sit on your hands and not do anything. You have to do nothing for about how long? For 1528, 1625, for almost an hour. You just have to sit here and watch it. Of course, if you're experienced price action trader, you could have taken some of the more aggressive trades, but I like to take the high probability trades. So when you get this break and a new high, this rally, this bullish rally to the bulls is over now. So I was thinking short now. So prices move down. First break above this bullish bar. This is the first entry, and prices pulled back. So first entry long failed, and there you get second entry long that failed as well. This was a good bar. This was a good trade. I like these trades. These are kind of my favorites. So I took this trade. It was a quick, easy scalp. Of course, you get stopped out of the runner. ES is very efficient. And this was you can treat this as a breakout pullback. You can treat this as a breakup where prices broke this little bit support pullback, and you got another almost bearish bar. So this was a good trade too. Now you don't want to take this bar. You're way away from EMA, and you're right into this trend line. So you want to wait. Then you got a break and a new low. This is kind of going sideways. This is 1, 2, 3, 4, 5, 6, 7, 8, 9 bars. So I don't see any good setup here. You might have taken this. This is a failed break out of this small congestion, but this will be hard for traders to take. I imagine, because once they see this big bullish rally up, they probably don't want to take this. So yeah, if you didn't take this, I was still expecting kind of prices to go to the support, because this bullish rally failed. The bulls obviously didn't convince market enough to go higher. You cannot go short into this. This would be kind of first entry, second entry, not bad, but you cannot go short into the support. Price action rules are rules. We have to follow them. You got trend line walking higher, but you don't get a retest and prices just go down. Here you can see first entry long failed, pullback, second entry. This is a good place to go short. The EMA is holding, and at this point it is kind of starting to look very. This was the time where I drew this trend line, because the fact that this, I was expecting to push a little bit more higher, below this support. And this was the all the move that the bulls managed to assemble. And look how quickly it shut down. So bulls got really smacked on their hands here. So this was the first entry, second entry long that failed under the EMA. This is important. This is starting to be very range, very downtrend-ish under the EMA setup. And this was a very tempting, but this is so many stems, and this is starting to look like a congestion. We got break a new high. This trend line working higher, break new high. But I had to let this go because you cannot enter this stems. And then notice how this channel, notice how the prices react. This is telling me that this channel is kind of valid because prices they are turning down here, and there has to be a reason why they are turning down just here specifically. And so we got a break, new high. If you went short here, you probably had a loser, or you didn't. Oh, excuse me. But I kind of don't like this trade much because yeah, and you might have had 10 ticks. Yeah, so you would have scalped up anyway. But I don't think you want to enter this. Look, let me look. This bullish move kind of looked still a little bit strong, and we are kind of overdue. We've been trending down for quite some time. So I don't think you want to trade it. I think you just want to wait because this might happen. You might get a little bit push. We didn't break above this. So once we make this triple top, once we made this triple top and this move higher failed and you got lower high, now you want to go long. Now you're going to want to go short because this is a break of this trend line and you're waiting for a new low. And it was the five. I took this trade today. I took this trade today, and actually I was dealing with some traders. I was answering a lot of emails, so I didn't take any of these, but I was watching it. I was always alt tabbing into NinjaTrader. But this was the third trade for the day that I took, and yeah, and let me see. Oh, it's right here. This is what I saw. I saw first entry short because prices broke below this bar, so this is first attempt to go lower, buy bears, pull back, second entry short. It was very tempting to go short here, and you probably could have. I just was a little bit afraid, maybe I was too much into my emotions, and I probably should mark it because it is second entry short. It is below the EMA in a downtrend, but since we had this break, I was kind of a little bit scared, which I should have been. But once you made this lower high, again EMA is holding big stem bearish bar. This is where you want to enter, and yeah, then you can just chopping lower. I don't like taking these trades at the very low of the move. Look at this, you cannot take these. This is very low. You never know when it's going to turn down. And look at what happened. Wow, this is actually, bulls are really throwing the towel now. So you never know what's going to happen in the markets, far too long. This wasn't a bad trade, but I just don't like, after the whole day of trading, I don't like taking the trades into the late hours. We're gonna mark it anyway because it's a good trade, but yeah, it looks like we are now kind of overdone. I would be expecting a little bit correction higher now. Maybe chop around lower here, but then eventually go higher because look how overdone this move is. So oversold. So that's the lesson for today. I hope you had a good day. It's Friday, so if you had a bad week, unfortunately you don't get much chances to take it back, but next week you can come stronger. And look how this midline fits. Look at one sitting here, holding it here, holding it here, here and here. Market geometry works perfectly. Price action. If you're a price action trader, you get such an advantage over other traders who use indicators, and this is majority. We are a small community here. Price action traders are like only 20% of traders. The rest of the, they're buying indicators. They are buying useless courses that don't work. So if you just learn to read the chart, if you learn to understand why this failed, why my example with the hedge fund manager, why did he wanted just to find others, somebody who's going to take other side of his orders. He rallied up market just a little bit, used this pattern, and then dumped his shares. So or something like that. Doesn't have to be hedge fund manager specifically. Can be somebody else, but some big player basically. So yeah, hopefully you were this was insightful to you, and I'm gonna wrap it up. I'm gonna show you a big picture. I kind of don't like trading such a big picture like this, but yeah, it is a good tool to zoom out during the day and kind of get the feel what the market is doing. Look, the market is trending down now. You don't want to get too zoom in and focus on the individual patterns. You always want to pay attention to overall market context, the market structure. So have a good weekend, and I'll see you in the next video. Bye, guys.